Hello, everyone, and welcome to Financial Accounting. Today, we continue discussing prepaid expenses. I will show you how to record journal entries for prepaid expenses, how to prepare an amortization schedule in Excel, and how to record monthly expenses. Prepaid expenses refer to expenses paid before they are incurred. In other words, anytime you pay a bill before receiving goods or services, it's considered a prepaid expense. Subscription is one of the common prepaid expenses. Make sure to watch part 1, where I explain what prepaid expense is in great detail. Let's look at an example. We have 1 year of subscription that we will need to record. The subscription year runs from August 1st, 2024 to July 31st, 2025. Yearly subscription expense is $25,500. The monthly subscription expense is $2,125. It is calculated by dividing a yearly subscription of $25,500 by 12 months. We are going to look at 3 scenarios. First, we will look at subscription expenses paid monthly. Second, we will look at prepaying for a subscription for the year. Third, we will look at paying for subscription on the agreed-upon schedule in 3 equal installments. If you want to learn more about prepaid expenses, how they impact the financial statements, and why they need to be recorded differently from regular expenses, watch my video Accruals and Deferrals. I'm posting the link here and in the description below. The first is the easiest. If you pay for a subscription monthly, there is no need to worry about prepaid expenses. You debit or increase a subscription expense and credit or decrease cash. Note that the debit part of the entry to record monthly expense will be the same in all 3 scenarios, because the monthly subscription expense is the same, $2,125 per month. The only change you will see is on the credit side. The second scenario involves prepayment. A prepayment for 1 year was made in advance on the 15th of August, 2024. In this case, we need to record the prepaid expense first and then recognize it monthly. Prepaying for a subscription in advance is the most common scenario, as it saves subscription providers a lot of time. They only bill you once instead of generating bills and collecting payments monthly. A payment is recorded as follows: a debit or increase to prepaid subscription of $25,500 and a credit or decrease to cash for the same amount. Just a reminder, a prepaid expense is any expense you pay that has not yet been incurred. Prepaid expenses are also known as deferred expenses. Recording these expenses is part of the accrual accounting process. It requires you to record expenses when they are incurred and account for them at that time. This is an accrual basis of accounting. Remember that a prepaid subscription is an asset account. It is increased by debit and decreased by credit. The balance in the prepaid subscription account at this point is $25,500. At the end of August, we need to record a subscription expense for 1 month. We debit or increase the subscription expense account by $2,125 and credit or decrease the prepaid subscription account by the same amount. The balance in the prepaid subscription account is decreased by $2,125. At the end of the first month, the balance is $23,375. You will see the same amount in the amortization schedule for the month of August. If you only have 1 prepaid expense, your amortization schedule in Excel is very simple. It is more complex when there are multiple prepaid expenses, which usually start on different dates and last for different periods of time. The purpose of an amortization schedule is to ensure that the balance in the general ledger for prepaid expenses is correct. You may need to organize your schedule differently and use a pivot table to make it easier to reconcile with the general ledger. I will show you how to do it in a different video. Let's look at the first schedule when a prepayment is made in full for the subscription year. Expenses are usually required to be recorded monthly. So let's prepare an amortization schedule in Excel, where we record the prepayment first and then recognize subscription expense monthly. The monthly expense will be $2,125, which is $25,500 divided by 12 months. In that case, you can create a spreadsheet outlining your monthly expenses that must be recorded in your general ledger as an adjusting entry. Think of the schedule as a T account for prepaid subscription. Remember that prepaid expense is an asset account. It is increased by debit and decreased by credit. Remember, on the slide with the general journal entry for August, we calculated that the ending balance in the prepaid subscription account was $23,375. On the schedule, it is the same, $23,375. And when you look at the trial balance in the accounting software, it will also be $23,375. This is how you make sure you recorded the adjusting entry correctly. I have a video in which I explain in great detail how to build a schedule in Excel. I am posting the link here and in the description below. Schedules may differ from company to company, but the idea is the same: to know your balance in the prepaid expense account at the end of each accounting period. Let's look at the third scenario. The yearly subscription of $25,500 is paid in 3 equal installments on the 15th of the first 3 months of the subscription year. Each payment is $8,500. Note that the monthly expense is still the same, regardless of how the subscription is paid for. The first payment is recorded on August 15th. The prepaid subscription account is increased or debited by $8,500, and cash is decreased or credited by the same amount. The balance in the prepaid subscription account is now $8,500. All 3 payments will be recorded the same on the 15th of the month. At the end of August, we record the following adjusting entry: a debit or increase to subscription expense for $2,125, and a credit or decrease to prepaid subscription for the same amount. Note that the monthly subscription expense is the same in all 3 scenarios. The balance in the subscription expense account after this transaction is $6,375, which is the amount of the first installment payment of $8,500 minus the monthly expense for August for $2,125. Let's look at the second schedule when a prepayment is made in 3 installments. The monthly expense is $2,125. This didn't change if you compare it with the first schedule. Think of the schedule as a T account for prepaid subscription. Remember that prepaid expense is an asset account. It is increased by debit and decreased by credit. We have 3 payments or increases on the debit side and 12 decreases or monthly expenses on the credit side. Remember, on this slide with the general journal entry for August, we calculated that the ending balance in the prepaid subscription account was $6,375. On the schedule, it is the same, $6,375. And when you look at the trial balance in the accounting software, it will also be $6,375. And this is how you make sure you recorded the adjusting entry correctly. The schedule is very similar to the first one, but we have 3 payments instead of 1. And the running total balance is different until the 3rd prepayment is made. You can find the details of how to prepare an amortization schedule in Excel in Part 2. And now I want to show you how easy it is to make changes to the schedule when you use the formulas. Watch Part 2 to learn how to build the formulas for both schedules. Let's say you got a revised invoice with a discount after you already prepared the schedule. The new yearly price is $24,000. All you need to do is enter the new yearly price and press Enter. Voila! The schedules are updated. You may need to pause this video to make sure that all payments and expenses are updated on both schedules. It is incredible how easy it is to do it. Using Excel formulas make your work much easier. I hope you found this video helpful. If you did, please make sure to subscribe, hit that like button and ring the notification bell so you're notified when we release more videos like this. Visit my channel for more videos on financial and intermediate accounting. Thank you all so much for watching, and I hope to see you all again in the next video.